Welcome to the Commercial Real Estate Show, your source for insightful analysis and enlightening discussions. Hello, I'm Michael Ball. Thanks for joining us on one of the 47 radio stations, or maybe you're listening on iTunes or the show website, or maybe you're seeing our video on YouTube. Thanks for being with us. We have a fantastic show for you today. We're going to talk about crowdfunding in commercial real estate. I think crowdfunding is a lot bigger than a lot of the principals out there that own real estate really realize. Also, retail investors, everyday investors are able to go online with small amounts of money, sometimes as small as $5,000 or $1,000, and invest in large commercial real estate, some buildings maybe that you're aware of in your market area. So please welcome my first guest. We're going to talk to Ben Miller, his CEO of Fundrise, and he's joining us on Skype. Ben, thanks for being with us today.
Thanks for having me.
Well, we appreciate it, Ben. And if you will, give us kind of an update on where commercial real estate crowdfunding is. How prevalent is it? It seems like a lot of people I talk to that are sponsors, that are raising money, are like, crowdfunding, I'm not really sure about it yet.
Yeah, I mean, think about how new the space is. You know, the first crowdfunding deal was in late 2012. It was something we did. It was completely novel in 2012, 2013. I remember when I was talking to real estate developers, I would tell them about having thousands of investors through the internet. People would tell me I'm crazy. And then in 2014, people started telling me that was interesting. And in 2015, people started telling me it was obvious.
Okay.
And so in probably 2012, maybe there was like $300,000 raised for crowdfunding. In 2015, easily $1 billion to $2 billion.
That's interesting. So you went from crazy to obviously we need you.
Yeah, right. To being like, who are you?
Right. Great. And it all started, right, with the Jobs Act that allows sponsors to advertise openly for investors. So tell us a little bit about that and some of the recent Title III regulations.
Yeah, I mean, it's interesting that in response to the recession, Congress and the president did something unusual, which was to agree on something. And they agreed that they needed to change the regulations around fundraising, and they passed those under something called the Jobs Act, which changed how you can raise money, and in particular, basically let the internet become a tool for fundraising. I mean, before that period, it really wasn't practical to use the internet to raise money. Tickets for airplanes on the internet, you buy your clothes on the internet, you bank on the internet. Why wouldn't you invest in fundraising on the internet? I mean, it's obviously going to happen, and the regulations, there are a lot of technical aspects to it, but fundamentally what it lets you do is advertise or generally solicit, and it starts to allow anybody, not just institutional or high net worth investors, to have access to this new class of investment, which is like an online real estate investment class.
Right. So it used to be really illegal, right, for a sponsor that was doing a development or buying a piece of property to go out and just advertise for these private equity investors. They had to do someone they knew, right? Someone at the country club.
Right. I mean, so the technical language is you had to have a pre-existing material relationship with somebody, and so you couldn't go to somebody you didn't know and ask them to invest in your deal. You had to have you had to know that they were high net worth, and anybody who's sort of my age or older will remember that there was no such thing as pharmaceutical advertisements. You couldn't advertise pharma drugs. And then in the mid '90s they changed that, and you could start to have Viagra could advertise their wares. And Bob Dole was the first person, probably the most notable person, to be part of that change. And now every other commercial is for some kind of drug. And so that's the shift happening. Before 2012, 2013, you couldn't advertise for an investment, and now you can. And that shift, probably 5 years from now, you'll see hedge funds and real estate and tech companies all on the internet, advertising and talking about their investments.
Yeah, I mean, it's interesting because I think a lot of people are interested in commercial real estate as a space to invest. And, if you didn't have, $1 million and the know-how and the connections to invest in commercial real estate. It was almost impossible, and really crowdfunding kind of opens that world up. And so talk to us about the difference between an accredited investor and a non-accredited investor, and what sponsors and investors can do there.
Yeah, well, so an accredited investor is by definition someone who's high net worth, and you can be high net worth because you have a lot of income, $200,000 or $300,000 a year, or you can be high net worth because you have assets of at least $1 million. So what the SEC has been saying for years is if you're high net worth, basically there's very little regulation, and those investors are sophisticated and can afford losses, and so they're not going to have a heavy burden of regulations and oversight. The problem with that is the internet. That's just not how the internet works, and so they started to change that with the Jobs Act. There's Title III and Title IV, which basically creates mechanisms for anybody to be able to invest into an online investment like real estate. And there are, like everything that the government touches, there are hoops you have to jump through. Whether you're talking about zoning, you're talking about securities law, there are permits you have to file, but it's something that something we're familiar with, and it's something that you can get your arms around once you understand what it takes. And what that will do is, I think it's going to create essentially like almost like a new asset class, where if you look at, 20 years ago, 30 years ago, nobody invested in mutual funds. 10 years ago, ETFs were this like rare investment, and now they're common. Online investment into real estate or a few other sort of core asset classes, you have lower fees, lower cost of doing business, more efficiency, and so it's going to become a given that 20% of your portfolio will be real estate.
Yeah, and you should have a certain percentage of your portfolio in real estate, and I like that number of 20%. And if you are a non-accredited investor, so you're not worth $1 million and your income is such that you're non-accredited, then getting money from those investors, I understand, is limited to $1 million, right? But if you're dealing with accredited investors, is there no limit? So could you go out and raise $50 million from from accredited investors?
Yeah, there's any real estate company who's ever raised money under a private placement, the rules are the same. You can raise money from high net worth investors, institutional investors, and the only thing you really need to do, other than be a good actor, is file a Form D. Mm-hmm. So the fact that you're using the internet is really like whether you do it with paper or you do it with a computer, that's just a mechanism. It doesn't actually change the regulations, and so once you think of it as just being like a tool, you know that the internet's a better tool than traditional old-fashioned way of doing business. The internet's going to eventually displace the travel agent, displace eventually everything will be signed electronically. Banks won't be bugging you for like original wet signatures, because that's just silly. Just the cloud is a better way to store your information than file cabinets. And as the internet gets at fundraising for real estate, it will become the dominant way people invest and fund a real estate deal.
Right. And we're short on the break, but are these new Title III regulations that are coming out, which I think go in effect in January, is that going to change and open it up even more?
Yeah, I think you'll see the Title III and Title IV in the Jobs Act really open the space up, really make it something that's like what the internet's good at, virality. So it can be viral, the information will become more transparent, and you'll see a new kind of real estate developer that embraces this type of technology become the dominant player. If you were an early adopter of the REIT or an early adopter of private equity, you became a dominant player in your region or in your product class. The same thing will happen with this new form of fundraising.
Yeah, I agree. I think it's going to be huge and a lot larger than a lot of people think. And we're going to take a short break. When we come back, I'm going to ask Ben about some of the projects that they've been involved in, so you can get some ideas of how these projects are working. We're also going to get some tips and strategies for if you're a sponsor, of how to go about doing doing crowdfunding, and also if you're a private investor. Like we said before, you can invest online with small amounts of money, so you want to know some best practices to do it. So stay with us. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back.
The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL.
Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking about crowdfunding and commercial real estate. My guest is Ben Miller. He's CEO of Fundrise. And Ben, as this crowdfunding continues to grow, and I think it's going to be explosive in its growth when retail investors, everyday investors can invest small amounts of money online in major projects, how big do you think this investor pool could be?
I always compare real estate crowdfunding to private equity or commercial mortgage-backed securities. You know, those industries started in the early 90s, and now each of those industries are about $500 billion to $1 trillion in total assets, or total dollars, essentially managed. And so I think that commercial real estate crowdfunding is going to be about that size over the next, I think it'll take, again, just like those industries, probably 10 to 15 years to get to that scale. But you're talking about like this becoming one of the major ways real estate gets funded in the United States.
Right, and that's going to be a lot of individual investors around the country, isn't it?
Yeah, I mean, here's the question that people will basically, we need to answer and then we need to prove, which is that if it's a lower cost way to raise money and invest in commercial real estate, then over time, it should beat the market. I mean, if you're going to deploy into commercial real estate and you're going to pay, no upfront fees and have very, very low amount of cost of doing business because it's digital, will you be less expensive than the private equity 2 and 20 or a non-traded REIT that charges you 15% upfront? I mean, if commercial real estate funded and invested in through the internet is a better mousetrap, over time it should outperform traditional ways to invest in real estate.
Yeah, I agree with you, especially because of the lower cost, the ease to do it. And in a lot of cases, when folks are investing in crowdfunding, they're investing in a specific property, right? They can find out more information on that specific asset.
Yeah, there's a bunch of different ways people do it. The way it started was people picking deals. So you might say, like, I like this apartment building in Seattle, or I like this office building in New York. And we've also done portfolios. So you have a portfolio of 7 deals, 5 deals, whatever, how many might be in that portfolio, so that people can then say, well, I don't want to pick a deal. I just want to have a diversified pool. And here's a pool of 10 deals at at some yields, 14% current yield. Then people might prefer that instead.
Right, and let's talk about a couple of the transactions that you guys have been involved in. Tell us about the 3 World Trade Center.
Yeah, well, so we crowdfunded the World Trade Center about almost a year ago. I've been in real estate for I don't know how many years now, 17 years, 18 years, and during my time as a developer and as an investor, worked for private equity fund. I've worked for big real estate companies. I got to know some of the folks at Silverstein Property Group. Silverstein is the owner developer of the World Trade Center, and when we started this business, those guys were really helpful. Ended up investing in the company and getting on my board. And so, as part of joining the board of Fundrise, they offered to help us get a piece of the World Trade Center and be able to offer to the crowd. And so it was a complicated transaction. You're talking about 3 World Trade Center was a $2.5 billion building, right? One building, $2.5 billion. and it's part of a $20 billion development in Lower Manhattan. So the complexity of investing into that deal, I mean, it was just extreme. But arguably, it's some of the best real estate in the entire world. Certainly one of the most important real estate developments in the world. And we thought it was important to try to get this, increase access. And for some people, they look at, seeing Three World Trade Center as a crowdfunded investment was like a turning point for the whole industry. It sort of proved that this industry had arrived.
And how much of that deal was funded? How much was raised through crowdfunding?
We did it at $5 million.
Okay. All right. And we are talking with Ben Miller, CEO of Fundrise, and we're talking about crowdfunding. And Ben, tell us about your preferred equity product. How does that work?
Well, so we have, there's two different things with crowdfunding, right? There's the fact that it's a new technology, and then there's a question of, well, how do you want to invest into the industry? So we, for various reasons, prefer kind of a debt-like product, so senior debt, mezzanine debt, or preferred equity that's basically like mezzanine debt in that it has a fixed return, it's senior to real equity, and it has a maturity date. And so that's something we find it fills a gap in the market. A lot of real estate companies want to own an asset for the long term. They don't want to have a JV equity partner where they lose a lot of control. And so they'll bring us in, and maybe we would, let's say they take a $20 million deal, and the senior lender might put up $15 million, 75%. We would put in half the equity, $2.5 million from Fundrise, $2.5 million from the developer or a developer and their friends and family. And we would then have we'd be senior to the equity, but with a fixed return. Maybe the fixed return would be 13%. And so it's like a mezz investment, but without a lot of the burdens. You see with mezz a lot of inflexibility. And so it's this hybrid product that we found gives investors high yield returns and gives developers more long-term control of their deal.
Yeah, I can see the advantages as the investor being senior to the developers and owners' equity. That's a nice position to be in, and you have a good expected return. And like you said, you have a maturity date that you expect to get your funds back. And I guess there's also some benefits for the developer, but they've got more leverage. And like you said, they have total control of the asset and the increased equity as well. So there's benefits for everyone, isn't there?
Yeah, we found it to be a good fit. We do a deal a week. So we've closed almost 100 commercial real estate deals. And so from an asset management point of view, it's a lot easier or a lot less burdensome to asset manage debt products than it is to asset manage to a true joint venture equity.
Yeah.
And so one of the reasons we chose this product was we found that it let us move faster and do more high quality deals because if you're a joint venture equity with a real estate developer, you really have to be active as an asset manager. It's hard to do that if you're doing a lot of deals.
Yeah, that's a good point. Well, we're short on the break here, but tell us what you can about your $50 million shares for online investment trust that was announced by the press.
So we're in a quiet period, and so I can't talk about it. But I'm happy to talk about it at some point after we clear.
Okay, but what's public right now that's just in the press is that this is going to be a $50 million fund that's going to be invested in multiple property types. That's out in the press, right? Because it's public, right?
Yeah, there's a filing on Edgar, so there's information available. But unfortunately, I'm stuck. I'm in a quiet period, and anybody who's seen this type of stuff, the best thing to do is not say anything for the time being.
Right, I get it. No, don't go on national radio and start violating the rules, right? Well, Ben, thank you so much for joining us today. We appreciate your insight.
Yeah, thank you for having me.
All right, thank you. Well, stay tuned. We're going to have more guests. We're going to talk more about crowdfunding. You hear how big it's going to be. Learn more about it. Stay with us. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back.
The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit CREshow.com.